Are you a trader who is interested today and wants to start trading futures? It doesn't matter if it's the index futures, some means of commodity futures, the currency futures. Supply and demand to me is the best way to trade. Okay, guys, because you are basically trading with the banks based on the activity of them placing their orders within the market. Understand that, okay? So I'm going to give you a rundown of a trading course that I put together for myself, all right, and the guidelines of what I follow each and every day in my own personal trading, okay? Now, you hear me time and time again, I talk about one of the most essential parts to day trading is simply understanding market structure. It is key. If you are looking to, maybe you've already started trading, grow your small account, okay? All right, to where you can start possibly leveraging more money into the market, you know, and minimizing the amount of trades you have to take on a daily basis. Maybe you're taking 4, 5, 6, 7 trades, and you only want to take 1 or 2. This is a great opportunity of trading and using supply and demand, okay? Simply follow what I'm talking about. If you're someone that's struggling with market structure, maybe you have a strategy you learned from somewhere, you need to understand. I'm going to go over that piece first, all right? It's really simplistic. Market structure is just a means of being able to read and understand overall what's going on in the market, meaning the flow of the market. Is it moving higher? Is it moving lower? Is it moving stagnant and moving sideways? You got to be able to understand and read that with your own eyes, all right? Lots of traders struggle with this. So let's go ahead and jump into the video, this part of it right now, where I'm going to cover that piece of being able to read fully what's going on in the market, okay? This is a representation, just a simple diagram that I put together. I've shown this in several videos. It's in a most recent video that I did about a week or two. Hopefully I can wrap this up in less than 20 minutes, guys, because I don't want to make this a long-winded video. But look, this is your, I don't want to say it, your Cliff Notes, your little snippet packet that I put together as a great guide. Again, one that I follow in my own personal trading. Now, let's say the market is moving higher, like we've been seeing it do the last few days, making higher highs and higher lows. One of the key essential points or parts of my trading is I must see a break of structure. I have to, guys. Primarily, I would not trade unless I see a break of structure. It is an essential part to me being a consistent and profitable trader. Break of structure just basically means as the market is making higher highs, breaking through areas of structure back to the upside. Meaning, if this was a previous high, it retraces lower, it broke higher, it broke that high there. Broke higher, pulled back, broke higher, broke that higher. So everywhere you see a BOS, that stands for break of structure, okay? Write that down somewhere, all right? Proper terminology to use in the trading world, all right? We broke higher, we broke structure again. So the way it works when it comes to supply and demand is we're looking for areas of aggressive buying if the market is pushing higher. Pushes up, pulls back, breaks higher. This would be a demand zone if the market was retraced to this area. Now, if the market retraces back to this area right here, this is what most traders would consider just a flat out area of support. The market sometimes will reject, pull back to this zone or this area right here, not a zone, but this area, and then just push higher, okay? So if you trade support and resistance, also maybe you do that 5% of the time in your trading, then you can look for opportunities as well. I tend to like to see and take my trades back at the origination point, which is where the demand started at, okay? The market breaks higher, it pulls back, it breaks higher again. Break structure again, okay? So what we're looking for is for the market to pull back to key areas where these rectangle boxes are. These are our areas of demand, okay? Aggressive buying, okay? That broke through areas of structure. The banks or the institutions are the driving force behind the massive moves, okay? And the way they do it is they pack on lots of orders that pushes the market or skyrockets higher when we're talking about price making higher highs and higher lows, okay? So we want to be buyers when the market pulls back to these key essential areas, all right, of demand. Now, the market, like I said, is making higher highs and higher lows, all right? That's represented where we have these little ellipses at and these lines at. These just stands for the market breaking through areas of structure. Now, like I said, sometimes the market will not pull back to these key areas of demand in these rectangle boxes. It makes a high here. What we will be looking for is the market to pull back to this area right here, okay? And then look to go higher, okay? Take a trade when the market comes back to an area of demand. Excuse me. But keep in mind this too. If you see, for instance, a demand level sitting or resting or stacked upon another demand area, okay? Or zone right here. This is 1, this is 2. The market could retrace back here. It could reject here. Or this area may not hold and it could break through it and test this area here. And then it wants to reject and push higher. Like in this example I've shown right here. The market starts to retrace. A low, lower high. This zone didn't hold, this demand zone, and it breaks through it and it tests this demand zone here. Then what does it do? It wants to go up, okay? It rejects the zone. A key part of my trading I talk about is a break of a candle in opposite direction, meaning a close of a candle above the last bearish down candle to go long, okay? All right? There's other little techniques or that traders use, looking for maybe a W structure. You hear a lot of people talk about that. Where the market is basically rotating, showing signs that it has no interest of going lower, so it starts to reject and making that W structure. All right, so the market rejects this zone here. Loads of aggressive buying, okay? Pulls back, rejects, and pushes higher. Once I'm into this trade, where am I looking to take the trade out at? At this area right here, okay? At least most of my contracts, and maybe I'll leave a runner on to maybe test the high up here. This is the high up here, okay? This high right here is a high. This is a low, okay? This is a leg. Major area structure to be broken to the upside would have to be broken above this area here at 44.55. So price, as it's doing now, making a high, higher low, it would have to break above this area for it to break major areas of structure, okay? Anything in between this leg right here is going to be considered as internal structure. This area here, if there was a level right here where price made this made a low, lower high, pushed down, made a new low, swung back, made a new lower high, and then broke lower, this would be internal structure here if the market was to clear that area as well. So any breaks above within this leg right here is going to be considered internal structure, as well as the market made a high here as it started pushing back to the upside and made a low here. So the break above this area right here is going to be considered as internal structure as well too. A high, higher low, break structure, that's internal structure being broke to the upside as well. Keep those things in mind. Market structure is not it's simplistic, but you've got to be able to just practice it, and you will be able to fall through and be able to see what's going on. So again, when we're talking about demand, then look for those areas where the market is making higher highs and higher lows and just pulling back to some key area of demand and wait patiently for the rejection. That's it. That's pretty much in a nutshell how I trade trading supply and demand, okay? Looking for aggressive areas of buying if I'm going long here. Now, okay, now you may be asking, okay, again, this is a simple trading course that I put together for myself years ago, and I stick by this each and every day in my own trading. So maybe you can learn from this. Maybe you can understand it. Maybe you'll be able to implement this in your own trading. It works, okay? We have a great Discord community, and there are individuals that understand market structure and are trading similar to the way that, that through the videos and information I share and the strategy I use in my own personal trading, they're taking that and incorporating it into their trading and are doing well themselves, okay? So join the Discord. You're interested, find the link down in the description portion of the video today. It's down there. Click on it and invite yourself in free. All right, so you may be asking, okay, so the market started breaking lower. Is this a supply zone? Supply simply means areas where there's aggressive buying. Look at this. If this was live in the market or on your chart, you would see all this aggressive aggressive selling taking place right here. So it broke an area structure right here, right? So would this be considered a supply zone? Yes, it would. But typically, and you can treat it as a supply zone because it is. But typically what I like to see is once the market breaks through starts to move to the downside and starts to take out its first level or first area of structure to the downside, which is this area right here, where it made and made a low right here, I like to see a follow-up with a lower high and then a lower low. This is going to really tell me that the market is more likely changing or shifting direction and now wanting to start to possibly trend to the downside, okay? All right? Now, from a lower time frame, it could be for a short-term period of time. If you see it happen on a higher time frame, then more likely it's going to probably want to change direction and move lower and start making more lower lows and lower highs. But the first break, be careful. When it breaks structure to the downside, or it could be to the upside, but in this case here, we're talking about it where it was moving higher, now it's moving lower. Once it starts moving lower and it breaks for the first break structure right here, the first time, the first area on its move to the downside where it breaks structure, be careful, because this could be just an area where the market is grabbing liquidity to turn back around, all right, to push higher, and then wants to come up here and take out this major area structure above 44.55. So again, I like to look for a structure break, a lower high, and then a lower low to be created to tell me, okay, now we've got a structure break here, follow through with a lower high and then a lower low, and now we got a structure break below this area here. You've got to be able to understand and see, just follow the market as it's moving to see and be able to read market structure. Now pay attention to this, okay? Now we're over on the chart, all right? Now what I want to show you, I'm just using the 60 range chart. We're not at this point, you know, zooming in to actually look for, say, a key entry, okay? I'm just going to give an example of, you know, the strategy and how I use it after this part right here, okay? So the market was moving lower, it was making lower lows and lower highs. And then it turns back around, okay? And it starts breaking structure. Remember I showed you? It starts breaking structure, all right, to the left-hand side of the chart. So let's just do this right quick. I'm going to, all right. So it makes a high, higher low, breaking higher. It starts breaking through areas of internal structure right here. So let's say it broke here, it broke here. It took out a major area, well, it took out this area of structure right here within this major, or the swing right here, okay? But this is a breaking structure right here as well. Pushed up, pull higher, broke structure, and it starts to break internal structure as it's moving higher to the upside. Pulls back, breaks higher, break structure right here, okay? Pushes up, pulls back, break structure right here, okay? So look what happens as it's making higher highs and higher lows. It's breaking and taking out areas of structure, okay? It also took out some additional areas of structure right here, okay? Small area of structure right here as it's moving higher. So understand, this is the market moving lower. This is it moving higher, making higher highs and higher lows, taking out structure over here and breaking through areas of structure as it is creating structure to the upside, all right? So what happens then? We've got a high resting right here, okay, at 44.30. The market turns. It makes a low, a lower high, lower low. What did it just do? It broke through this area structure here below 43.77. But it is the first break, right? So be careful, because we got the first break, then we got a lower high, but we do not have a fall through with a lower low yet. But that does not mean that the market cannot reject this area right here. This is a supply zone, okay? I'm showing you an example of a supply, all right? So it can definitely reject it, and I showed you that on the diagram as it was retracing back higher after breaking structure to the downside. Well, pulls back to the demand right here, and it does reject that area and it pushes lower, okay? But be careful, because now we got a lower low, and then the market pulls back, okay? So this will be an area right here. This will be the major high or the major area structure right here at 44.30.5 that it would need to take out back to the upside. Anything in between this leg from this high to this low is considered internal structure, okay? And it's got to break that back above. So we wait patiently to see if it's going to do that or not. And that's, you know, ultimately that's what you want to see happen. It's what you really want to look for. So what you want to see is something like this right here. I'm going to show you if the market did do this, was continue breaking higher, making higher highs and higher lows. It breaks structure right here, the major area structure, and then look for a pullback to some key area of demand for the market to continue running higher. But it doesn't do this here. What it does is it makes a low, lower high, lower low, pulls back, tests its supply right here, okay, and then it runs lower, okay? So you've got to be able to just pay close attention to every move that the market makes as it is currently making the moves that it is doing, all right? So let's continue forward. Then the market makes a new low here, okay? There's a bit of area of supply resting right here in this area, okay? Which is right here. It's going to draw it for you real quickly and move on. This area right here, okay? Look what happens. Low, lower high, lower low. Price never broke this area or major area of structure right here. pulls back, rejects this area, you can go short, okay? Again, this is on the higher time frame, but these are the things that we look for on a lower time frame. We want to follow the structure of the market on both a higher time frame and a lower time frame, okay? But when it comes to the actual strategy and the way I actually, trade it, okay, is that I like to see the market pull back to a key area of either supply or demand on a higher time frame, and then I scale down or move down to a lower time frame looking for my setup. I'm getting ready to show you that, okay? But this is just me showing you, the ebbs and flows of how the market moves and waiting for patiently. Again, price been a low, lower high, lower low. Now we've broke structure to the downside right above this area here, okay? And then we look for a pullback because this is an area of structure that was broken to the downside. Pull back to a key area of supply right here, and then look for the rejection to go short. That's ultimately, again, in a nutshell, how the strategy works, okay? And I just want to say this, as the market continues making this move to the downside, say for instance, this was a new, let's say this was a new low, right? Minute A low here, lower high, and then a new low. The next area that I would be interested in would be to see if market retrace back, okay, and pulls back to, if this would be a supply zone right here. If the market was a pullback to this area, this is a supply zone, but the market didn't come back and test that area. It kept pushing lower, okay. But you just go ahead and start marking those areas of supply as the market continues making lower lows and lower highs. If it's making higher highs and higher lows, then you're marking demand, okay, to the upside, all right. So let's go ahead and get rid of this, and this right quick, okay? And let's move forward now. All right, so quick rundown of the strategy. This is my lower time frame chart, but let's go back to the higher time frame just briefly, okay? This was that supply zone I was telling you about right here, okay? We broke structure right here below 77. Pulls back to a key area of supply right here, okay? Again, be careful on the first break because the market could, this could just be an area where the market is grabbing liquidity to push higher and break the structure right here at 44.30 and a half. But it pulls back. This is still a supply zone. And what we do at this point here, we mark the area on the higher time frame. This is my 60 range chart. I mark this area here, okay? Then all I do is I move down to a lower time frame chart that I use to enter my trades off of, okay? So I'm going to go down to my 12 range chart, okay? That red box you see right there, that's that higher time frame zone I just marked and showed you on the 60 range chart. Now, what I do is I wait patiently for the market to tap back into that zone. When it tap back into the zone, now on the lower time frame, I'm looking for a break or a structural break to the downside and then a pullback. So I'm looking for a structural break to the downside, and now I'm gonna mark a supply zone on the lower time frame and look for the market to pull back to that zone. Okay, so don't pay attention to this. I'm gonna show you what to pay attention to here. Okay, so this big box, pay attention to because we're waiting for the market to move back to that area, and it does. I'm showing you examples, guys. This is not in real time, but this is how I do it each and every day. All right, the market retraces back to that zone. It taps into it. Now, what am I doing? Part of the strategy, I'm looking for a break a structure to the downside on my lower time frame chart. Now, it makes a low, lower high, breaks lower, break structure right here below 43.93. Once it breaks structure below an area structure on my lower time frame, then I go ahead and I mark up an area of supply, okay? All right, so it broke structure here for the first time when it pushed lower here. It pulls back to this area right here. I had this yellow box right here. Now, I'm not interested really in taking a trade from there because when the market started breaking structure to the downside, all right, and one of the key things I like to see is a void or a gap resting back at a supply zone. This is kind of messy right here, even though there's some aggressive selling coming out of the zone. But the thing about it is, when we got the break below, the market immediately pulled back to this green candle right here. Okay, so it created no void or gap back at a zone in which I'm interested in trading from. So I'll pass that up. It's not clean enough for me to trade. Yes, it did reject it. If you took that trade, yes, you picked up some points. But I'm looking for clean areas where there's a void or a gap resting back at a supply zone in this case. Now, things get a little bit choppy or messy here because we start still making lower lows and lower highs to the downside, right? All right, so it makes a low here, lower highs, it makes a little break here, a low here, lower high, lower low. Now, the market could have pulled back up here and pushed lower, but it didn't. It pushed lower, it pulls back, and then it pushes to the downside. It basically pulled back to right through this area of resistance and broke lower. Now, had it tapped into this red box right here and rejected, I would have went short. This is an area of supply. Look at this, aggressive selling to the downside, okay? So we would wait for the market to pull back here, and we got a little gap or a void right here in between candles, okay? This red candle that took out this last bullish candle to the upside, from the bottom end of that wick to the top end of the top end of the wick on the third candle, there's a small little void or gap there. If the market pulled back there and rejected, beautiful short to take to the downside, but it didn't pull back there. Eventually it did though, okay? So the market keeps continue moving lower, okay? Making lower lows and lower highs, all right? So here is an area you could have taken a short from, and what you can do is, as long as the market is continuing making lower lows and lower highs, and we're breaking structure lower, let me show you. We made a low, we made a lower high, we made a low, okay? This here is an area of supply resting right here, okay? Let's mark it. Okay, I'm going back and showing you right here. The market retraces back to it. You look for the rejection. What we're looking for is either a strong means of rejection. Lots of times you'll see that with like a strong a bearish candle, like this hammer to the downside. It came up into the zone. It wicked it. Majority of the wick was just in the zone, but the body of it was outside of the zone, pushing to the downside, okay? All right? So we get a big wick into the zone. The body of it, which is the smaller portion, is pushing to the downside. That's a strong rejection right there. I typically get in trades like that aggressively when I see this type of activity on a candle like this. What I like to tell people when I state, you can also look for better means of confirmation, meaning a clear break of a candle or close in the opposite direction. So we got this last bullish candle to the upside. You can look for a break right below it, say below here at 64, or the candle closer at 63. Get into your trade and run it, okay? Get into the trade, all right, say 63, and take it down to the lows. Pick yourself up, 5 points there, 4 points there. This is on the ES futures, okay? All right, so 4 or 5 point scalp, that's pretty good, depending on how many contracts you're actually trading. But this is still an opportunity for a pullback because the market was continuously breaking structure below, all right, to the downside, pulls back, breaks lower, breaks structure here, supply zone, go short, all right? Then it continues doing that. It continues making lower lows. It does make a high here before running lower, but I'm also interested in this zone right here. This is where that blue line is marked at right there. Let's see if the market came back to that zone, all right? And eventually it did, to give us a little scalp to go short, okay? It makes a low, lower high, making lower lows, lower highs. Then it starts chopping back to the upside, making higher highs and higher lows. This is still a valid supply zone to take an entry from if we get rejection, all right? Look what happens. The market comes back to it, taps into this zone right here, okay? Wait for, an aggressive candle. If you see one that closes, like I showed you with the major wick into the zone and then moves away from it, I'll be aggressive. Or look for that candle close below the last bullish candle to the upside. We get the close there, all right, at 84 and 3/4. Take it back down to this area here, okay? Back down to the low of this last swing where the market moved higher right here and get out at 80 and pick yourself up another 4 points. So if you got into this trade here, picked up 4 points, and then got to this trade here, that's 8 points on the day on the ES. Just simply being patient, all right? Well, actually, I take that back. Not to the same day. This was at getting close to lunchtime on the, I think the 14th of October. Yeah, 14th, no, take that back. 13th of October. But the next day, you could have picked up, 4 points shortly after, about 15 minutes after the market opened up. But I'm just showing you, you can follow the market, use your lower time frame to get in these type trade setups. All right, look what happens here. Okay, the market, this is the demand zone, right? This is the demand area here, okay? We haven't fully broken structure, the major area structure back above 4430.5 yet, but the market is moving higher, and it takes out internal structure right here above 4407.5. This is a demand zone. Pulls back to it, on the 17th of October. I'm going to show you here on the lower time frame chart right quick. Okay, this is it right here. This is the higher time frame demand zone that I just showed you. It pulls back to it on the 17th of October. All right, once it pulls back to it, all right, and we tap into it, all we're doing now is looking for a structural break on the higher time frame. On the lower time frame. Take that back. Lower time frame. Okay, taps into it, boom, break above. We get a structural break above here at 43.78 and a quarter, and you just wait patiently for the market to return. Now, sometimes it may not happen instantaneously. Sometimes it won't happen immediately. Sometimes it may not happen to the next day. Okay, but it did. It retraced back to that zone. Okay, take a look. We're gonna draw it right here. This is it. Okay, this would have been. Well, I'll tell you what. Let me go ahead and just draw it so you can see it. Okay. All right, right here. All right, it's like one tick away. I count that. Okay, I said this in videos before. Anything less than 4 ticks, 3 ticks, I'm counting it. So it's only 1 tick primarily, right? Look what happens. It breaks into, it comes back to that zone, all right? You can take the break of the candle, close of the candle above, and go long, okay? Where we're aiming for, the high right here, okay? This high right here. So it breaks above, say 76, and it runs up there to 87.5. I show this each and every day in my own trading because I post these type entries over on the Discord community. And that's one thing, there's an actual channel on the Discord titled Trading Floor. I post my screenshots, I post entries, my trades on there. I do videos, where you see me trading and, supply and demand as well. So it's these aren't things I'm just talking about and showing you. I practice it and I show it on the Discord. I show it in my live recorded trading sessions as well. So I live by this on a daily, guys. I live and breathe supply and demand because that's how I trade, okay? So you get the rejection here, you go long. Simple as that. You're just waiting for a price or the market to tap into a higher time frame zone. Then, once it does that, move to the lower time frame and wait for a structural break off the lower time frame. And then wait for the market either pull back to, in this case here, a demand zone that was now created off of the lower time frame. Wait for the pullback. This is the demand zone on the lower time frame. And look for the rejection. Go long. Vice versa if we're looking for shorts. That's all it is. Okay? Simple strategy to use. Yes, you got to be patient. Sometimes you got to wait it out. But the thing about it is that if you are noticing once the market takes out an area of structure on the lower time frame, and then it continues to is breaking structure to the upside, you can still look for opportunities to go long way before it even gets back over to the original zone where the initial break of structure happened now on the lower time frame. Like right here. Pushes up, pulls back, break structure, pulls back. This is demand. Go long. Okay? Break structure back to the upside. Pulls back. Go long if you get the rejection to go long. There's 2 opportunities here to scalp to go long. Okay? This is the beauty about the way I like, how I trade, even on these lower charts like this, because there's so many opportunities, especially on the, here in the ES you saw today. Not today, but you saw within these examples that you can take multiple entries. But on the NASDAQ 100 futures, oh God gracious, there's so many opportunities to scalp every single day using this strategy, okay? All right, and just looking for breaks of structures or structural breaks in any intended direction, okay? And I'm going to say this. The best opportunities unfold when you're moving in the direction with the higher time frame, looking for your trade opportunities, all right? But that's all I wanted to show you guys today. Please, this is a guideline. This is a simple course that I put together for myself, and I follow with it each and every day, practice it. I've been doing so for many years and been very profitable in doing so, okay? So take this, okay, if you choose to, implement it into your own day trading and see it if it works. But practice, practice, practice. I'm not saying go live with it tomorrow, but there are individuals, plenty of individuals that use the same strategy and practice it the same way I do over on Discord, and they found success. They are finding success. There are still some right now that are still going through the process of understanding and grasping and learning through the videos that I put together, because I give the information away for free here on my channel. I'm just trying to pass things forward, guys. That's all. But anyways, it's up to you to really want to dive deep into the videos and learn it for yourself. Outside of that, that's all I have for today in today's video. Yes, I know I ran past 20 minutes, guys. I'm so sorry about that. But look, I try to break things down because I want people to truly understand. I'm not one of the individuals that are just going to make you, I don't want to, I want to see people succeed, okay? I really, truly do, okay? I know I'm getting caught up in my words, but I'm trying to get it out. I'm trying to push this information out because I want to see people maybe get out of the situations that they're in. Anyways, if you're interested in joining the Discord, find that link down in the description portion of the video and invite yourself in for free as well. Please take the time to go ahead and sub to the video. Not the video, to the channel. If you have not already subscribed to the channel, Make sure to turn on all your post notifications and drop a like on the video, guys. It helps the algorithm, helps the channel out. It helps get this information in front of other individuals so other people can be inspired. Those that are inspired and have passion and want to trade, so they can start finding success earlier, than having to wait later in life to do so. Take care. I'll see everyone in the next video.